The Central Highland Regional Council 2021-22 budget is the second in this term of council and delivers on the promise to keep council in a balanced financial position. This council, your council, provides 60 plus core services that are not always visible or noticeable or promoted, but they are all essential to make this region a healthy, safe, inclusive, livable economy. Preparation of a $221.1 million budget for a local government area the size of Tasmania with just 15,000 rateable properties and a workforce of around 480 people is a complex task. Every year, we strive to not only meet the expectations of our 13 communities, but to provide a safe and attractive workplace for hundreds of local people, support local business, maintain $1.9 billion of assets, including 4,632 kilometres of roads, and keep rates and charges and their increases for households to an absolute minimum. The last financial year started with the uncertainty of the impacts of COVID-19 pandemic. This year, the task for Council was to adapt its new budget to economic conditions that now prevail. We have largely avoided the recession experienced by much of the nation. However, we need to ensure that we continue to work hard to keep the region strong by delivering balanced, responsible budgets. For the last 8 years, Council has maintained a relentless recovery strategy after the 2011-2012 resources sector downturn and kept annual rate increases in a low tide band. Combined with sensible targeted capital programs, we have succeeded in a broader recovery with positive trends in property values and key industries now growing and expanding. Council's financial position is one of the strongest in the state, and to keep that strong position in the future, we will adopt medium increases this year. However, different from previous years, the rate will vary across the major sectors as we strive to maintain services and ensure proper delivery of our utilities. Substantive increase in valuations across the state this year, including the Central Highlands, now sees that the rural sector accounts for approximately 71% of the gross valuation of this local government area. As a sensible approach to an equitable contribution to our rate base, rural rates will increase by 5%. To temper that increase and the effect of valuations, Council has capped the amount landholders will pay to no more than 15% of their last assessment. This is a fairer outcome in the short term as we deal with the magnitude of valuation increases in forward budgets. Resource sector rates will increase by 4% and other residential and commercial rates will increase by 3%, reflecting lower or little valuation change. Combined with utilities charges, residential properties will see an average increase of 4.6%, which is $147 annually, or about $2.81 per week. Our long-term financial plan will revert to lower increases as recovery becomes more sustained. The airport has recovered from the substantial COVID-19 impacts and the sale yards have performed well. The prudent investments in these businesses and a further investment of $1.4 million this year reduces our reliance on rates income. The path to full cost recovery in water, wastewater and general waste continues, and much of our strategic capital investment is directed at achieving those outcomes as quickly and as efficiently as possible. Capital projects this year total just under $60 million. The capital and operating budget is still largely expended on the vast transport network within the region, with more than $77 million shared across our local government area. Those things that were identified as important to our communities in a recent survey, such as youth services, received $142,750, and parks and gardens and swimming pools sees a further $21.8 million invested. This is a budget that needed to be flexible to adapt to the extraordinary conditions presented by recent impact, but continues to recognise the need for sensible investment that secures long-term sustainability.